Here's a question that ends up costing people thousands of dollars, and most of them don't even realize they're answering it wrong until it's too late. Should your tiny house have wheels, or should it have a foundation? It sounds like a small technical detail. It is not. This one decision changes your financing options, your taxes, your insurance, whether banks will even talk to you, whether your home builds you wealth, or it quietly loses value every single year, and even where you're legally allowed to park it. Two people can build what looks like the exact same tiny house, same size, same layout, similar price, and end up in completely different financial situations 5 years later, purely because one chose wheels and the other chose a slab. Today we're breaking down tiny house on wheels versus permanent foundation with real 2026 numbers, the true costs, the legal differences, the financing gap, and the mistake that catches almost every first-time buyer off guard. Stay with me until the end, because the final section covers the one factor that should actually make this decision for you. And it's not the one most videos focus on. Quick ask before we start. If you're seriously weighing this decision right now, hit subscribe and turn on notifications. This channel breaks down the real numbers behind tiny house living every week, the stuff builders and sales pages tend to leave out. You're going to want that information before you sign anything. Okay, let's get into the real differences. Let's start with a clear definition, because these two options aren't just same house, different base. Legally and financially, they're almost two different categories of housing. A tiny house on wheels, often called a THOW, is built on a trailer chassis, which means in the eyes of most regulators, it functions closer to a recreational vehicle than a traditional house. It's mobile, it's typically excluded from standard property taxes, and depending on its certification, it may be treated legally like an RV rather than real estate. A tiny house on a permanent foundation is built the way a conventional home is built. Footings, a slab or crawl space, permanently attached to the land beneath it. Legally, it's classified as real property, the same category a regular house falls into, which means it follows standard building codes, standard zoning rules, and standard property tax rules. That single classification difference, real property versus personal property, is the root of almost every other difference we're about to cover. It shapes what loans you qualify for, what your home is worth over time, what taxes you pay, and even what insurance policy actually covers you. So keep that distinction in mind, because it's going to come up again and again. There's also a hybrid category worth mentioning briefly: park model tiny homes. These are built to a specific ANSI code, typically include 1 bedroom and 1 bathroom, and are treated similarly to RVs for regulatory purposes, even though they're generally not designed to be towed frequently the way a THOW is. They're popular in RV parks and dedicated tiny house communities, offering a middle ground between full mobility and full permanence. We won't focus heavily on this category today, but it's worth knowing it exists if neither pure wheels nor pure foundation feels like the right fit for you. Let's get into real 2026 numbers, because the sticker prices you see online rarely tell the full story. For a tiny house on wheels, most buyers in 2026 are paying somewhere between $40,000 and $80,000 for a professionally built unit, since the wheeled version skips foundation work entirely. As one example from industry data, a 150 square foot THOW from an established builder totaled around $55,000. Add the trailer itself, typically $4,500 and $9,000 if it's not already bundled into the build price, and you've got your total wheeled home cost. For a permanent foundation build, the home itself typically runs $30,000 to $60,000, similar to a wheeled unit, but then you add the foundation. A concrete slab runs about $4 to $7 per square foot, so a 200 square foot slab adds roughly $800 to $1,400. That sounds small, but the real cost driver isn't the slab itself. It's everything that comes with permanent placement. Industry data shows swapping from wheels to foundation can push total project costs up by around 20% once you factor in permits, inspections, and code compliance that wheeled homes often skip entirely. All in, most foundation-based tiny homes land somewhere between $50,000 and $150,000 total, with the foundation and site work typically representing 10 to 20% of that total figure. So on raw sticker price alone, wheels almost always win up front. But, and this is the part that trips people up, upfront cost and total cost of ownership are two very different numbers. and we're about to see why. To put both options on the same scale, general tiny house construction costs run around $150 per square foot on average, climbing to $300 or $400 per square foot for higher-end materials and finishes. Figures that apply broadly whether you're building on wheels or on a slab. The real cost divergence isn't really about the structure itself. It's about everything surrounding it. The trailer and running gear on one side versus the foundation, land, and permitting on the other. That's why two nearly identical 200 square foot homes, one on wheels and one on a slab, can land $30,000 or $40,000 apart in total project cost once every line item is accounted for. Here's where the comparison gets genuinely complicated, because a foundation build requires something a wheeled home technically doesn't: land you own or a long-term lease. Buying land specifically for a tiny house can range enormously. Some smaller infill lots in certain cities have been found for as little as $500, while land prices elsewhere can run into the tens or even hundreds of thousands depending on location. With one national cost breakdown listing land expenses anywhere from $3,000 to $150,000. That's an enormous range, and it's almost entirely dependent on where you want to live. A wheeled tiny house sidesteps this upfront land purchase requirement. You can park on rented land, in a tiny house community, on a friend's property, or move between locations as needed without ever committing to buying property outright. That flexibility is a genuine financial advantage if you're not ready or not able to purchase land yet. But here's the trade-off that's easy to miss. Renting a spot for your wheeled tiny house is an ongoing monthly expense that never builds you anything for as long as you own the home. A foundation build, on the other hand, means you're purchasing an appreciating asset, the land itself, alongside your home. Over enough years, that land purchase can end up being the better financial move, even though it requires far more capital up front. Whether that trade-off makes sense for you depends entirely on how much cash you have available right now versus how much flexibility you need in the near term. This is the section most tiny house content skips entirely, and it genuinely shouldn't, because it affects your wallet every single year you own the home. Tiny houses on wheels are typically treated similarly to RVs for tax purposes, which means they're generally excluded from standard real estate property taxes. However, you're not off the hook financially. Most jurisdictions still require you to pay for your parking space, whether that's a lot rental fee or a space in a tiny house community. And some areas apply specific RV or personal property taxes, depending on local rules. Permit costs for a wheeled unit tend to be lower and simpler, since you're often not subject to full residential building code in the same way a permanent structure is. A tiny house on a foundation is a completely different story. Because it's classified as real property, it's subject to standard property taxes in your county, just like a conventional home. It's also subject to full building code compliance, meaning your permits, inspections, and construction standards need to meet the same bar as any other permanent residence in your area. Permit costs for foundation builds commonly range from $500 to over $3,000, and that number climbs further depending on your specific county's requirements. Zoning is a genuine minefield here too. Foundation-based tiny homes need to comply with local zoning ordinances, which vary enormously by state and county, and some areas still have minimum square footage requirements that a genuinely tiny house may struggle to meet without qualifying for a specific accessory dwelling unit exemption. The bottom line, wheels generally mean fewer legal hurdles and lower ongoing tax obligations, but less legal protection and permanence. Foundation means more paperwork and ongoing property tax, but a legally solid, code-compliant home that isn't operating in a regulatory gray area. Utility connections deserve a mention here too, since they quietly follow the same pattern. A wheeled tiny house typically connects to power the way an RV does, often through a standard 30-amp or 50-amp cord plugged into an existing electrical supply, whether that's from a host property or an RV park hookup. Simple, fast, and inexpensive to set up. A foundation build requires permanent utility connections, water, sewer or septic, and hardwired electrical service run to the structure, meeting full residential code. Reported costs for this kind of permanent utility access range anywhere from about $750 on the low end to $25,000 on the high end, depending entirely on how far the nearest hookup point is and how complicated your specific site turns out to be. It's a real cost, but it's also the cost of a permanent, code-compliant connection rather than something you might have to redo every time you relocate. If there's one area where these two options diverge most dramatically, it's financing. And this is genuinely the section that should weigh heavily in your decision. Tiny houses on a permanent foundation can often qualify for traditional mortgage financing, since they're classified as real property, just like a conventional home. Rates for foundation-based tiny homes have been reported around 4 to 6%, depending on your credit profile, genuinely competitive with standard home mortgage rates, and dramatically better terms than most alternative financing options available for wheeled homes. Tiny houses on wheels almost universally cannot access a traditional mortgage, because mortgage lenders require real property as collateral, not something classified closer to a vehicle. Instead, most wheeled home buyers turn to RV loans, which can offer reasonable terms, rates commonly ranging from 6 to 10% over terms of 10 to 20 years, provided your tiny house carries proper RVIA certification. Without that certification, buyers often fall back on personal loans, which tend to carry higher rates and shorter repayment windows, meaning bigger monthly payments even on a comparable loan amount. Put plainly, if favorable financing terms matter to you, and for most buyers, they should, a foundation build with access to a traditional mortgage can genuinely save you thousands of dollars in interest over the life of the loan, compared to financing a wheeled home through an RV loan or personal loan. That interest rate gap alone can be worth more over 10 years than the upfront cost difference between the two options. It's also worth understanding what lenders actually look for on each side. For a foundation build to qualify for traditional mortgage financing, lenders generally want to see solid home value relative to the loan amount and a credit score comfortably above the mid-600s, similar to standard home loan underwriting. For RV loan financing on a wheeled home, lenders typically care most about the RVIA certification itself, since that certification is what allows them to treat the structure as a financeable, insurable asset in the first place. Without it, you're often limited to personal loan territory regardless of how well built your home actually is. If you're leaning toward wheels, confirming RVIA certification with your builder before you sign anything isn't optional. It's the single detail that determines which financing tier you'll even have access to. This is, in my honest opinion, the single most important financial difference between these two options, and it's the one buyers underestimate the most. Anything on wheels tends to depreciate over time. The same principle that applies to cars and RVs applies here. Wear and tear on the trailer chassis, tires, and hitching components accumulates the longer you own it, and because it's treated more like a vehicle than real estate, it simply doesn't gain value the way land-based property does. Tiny houses on trailers, according to multiple industry analyses, offer little to no meaningful return on investment over time, similar to how a vehicle depreciates rather than appreciates. A tiny house on a permanent foundation tells a fundamentally different financial story. Because it's attached to land, and land itself tends to appreciate over time, foundation-based tiny homes have a real chance at building genuine equity, the same way a conventional home does. Over the long run, a foundation build also tends to have a lower total cost of ownership, since it typically requires less ongoing maintenance than a home that's constantly exposed to the wear of being moved and towed. Let's put a hypothetical on this to make it concrete. Say you buy a wheeled tiny house for $60,000 and a comparable foundation build, home plus land, for $100,000. 5 years later, your wheeled home might realistically be worth $35,000 to $45,000, having depreciated the way a used RV would. Your foundation build, benefiting from land appreciation even in a modest market, might realistically be worth $105,000 to $120,000. You spent more upfront on the foundation path, but the gap in what you actually own 5 years later is enormous, and that's the number most people forget to calculate before making this decision. Ongoing maintenance and insurance follow a similar pattern worth budgeting for either way. General tiny home maintenance and repairs typically run somewhere around $550 to $1,000 per year, and insurance commonly runs close to $100 a month, regardless of whether you're on wheels or a foundation. Wheeled homes carry an added maintenance category foundation homes don't. The trailer itself, including tires, axles, brakes, and hitch components, all of which were down with use and need periodic attention, especially if you're actually moving the home rather than leaving it parked long-term. Let's be fair to the other side of this comparison, because wheels aren't just a worse financial choice dressed up as a lifestyle choice. There's a real, legitimate advantage here that foundation homes simply cannot offer. A tiny house on wheels gives you something no foundation build ever can: the ability to change your entire location without packing a single box or hiring movers. If your job requires relocation, if you want to travel between seasons, if you're not certain where you want to settle down long term, or if local zoning your dream location makes a foundation build legally impossible right now, a wheeled home keeps every option open. You can chase better weather, follow work opportunities, or simply relocate away from a bad situation, a landlord dispute, a rezoned neighborhood, a place that just isn't working out, in a way a permanently foundation home never allows. There's also a practical entry point advantage. If you're not ready to commit to a specific piece of land, or you don't yet have the capital to purchase property outright, a wheeled home lets you start living tiny now, while keeping your long-term location decision open for later. Many people genuinely use a THOW as a stepping stone, living mobile for a few years while saving for land, then eventually transitioning to a foundation build once they know exactly where they want to put down roots. One honest downside worth naming on the wheels side: stability and safety. A structure sitting on a trailer, by its nature, sits higher off the ground and carries a lighter overall build than a home anchored permanently into the earth, which can make it more vulnerable in severe weather events like high winds. A permanent foundation, tied directly into the ground with proper anchoring, generally offers a meaningfully sturdier, safer structure in extreme conditions. If you're building somewhere prone to hurricanes, tornadoes, or heavy snow loads, that safety gap is worth weighing seriously, not just as an afterthought. Here's the honest breakdown, because the right answer genuinely depends on what you're optimizing for. Choose wheels if flexibility matters more to you than long-term wealth building right now. If you're not certain where you want to settle, if you want the lowest possible upfront cost, if you don't yet have capital for land, or if your local zoning simply doesn't allow a permanent tiny structure yet, wheels are also the smarter starting point if you want to test tiny living before fully committing to it long-term. Choose a foundation if you already know where you want to live, if building real equity and long-term wealth matters to you, if you want access to traditional mortgage rates instead of higher interest RV or personal loans, and if you're comfortable with the added paperwork of permits, zoning compliance, and property taxes in exchange for a legally solid, appreciating asset. And here's the factor that should actually make this decision for most people, more than any single number we've covered: your timeline. If you genuinely expect to stay in one place for 5 or more years, the numbers overwhelmingly favor a foundation. The equity you build, combined with better financing rates, will very likely outweigh the flexibility you're giving up. If you genuinely don't know where you'll be in 2 or 3 years, wheels protect you from the very real risk of investing heavily in a land and a permanent structure you might need to walk away from. Don't choose based on which option sounds more appealing on camera. Choose based on an honest answer to one question: how certain are you about where you'll be living 5 years from now? So, wheels or foundation? The honest truth is that this isn't really a tiny house question at all. It's a life certainty question wearing a tiny house costume. Know your timeline, and the right financial answer usually reveals itself. I want to know where you land on this. Drop a comment and tell me, are you team wheels for the flexibility or team foundation for the equity? And if you're currently deciding for yourself, tell me your situation. I read every comment, and I'm glad to help you think through it. If this breakdown actually helped clarify the decision for you, hit that like button. It genuinely helps this kind of honest, numbers-first content reach more people who need it. And if you haven't subscribed yet, now's the time, because next week we're covering exactly what happens when a wheeled tiny house owner decides to convert to a permanent foundation later, what it actually costs, and whether it's even legally possible in most states. Thanks so much for sticking with me through the whole breakdown. I'll see you in the next one.